Currently, the sentiment in the stock market is rather mixed. The main stock indices did not drop significantly last week. However, the stock market's dynamic remains negative. Analysts believe that it will persist for some time. On top of that, on October 4, many IT giants incurred hefty losses due to a global Facebook outage. That is why the growth of the stock indices remains limited. The Dow Jones declined to 34,000 from 34,800 last week. The index is likely to slightly recover thanks to a correction. Nevertheless, the general trend will remain bearish till Friday. At the end of the week, the non-farm payrolls report is due, so the Dow is likely to stay in the range between 34,200 and 33,400. The S&P 500 index also decreased to 4,300 from 4,425. Now it's correcting upwards, but it's unlikely to last long. There are several reasons for this. First of all, the fundamental background has changed. The earnings season that dragged stock prices up has ended. At the same time, the US government is reducing stimulus measures and delaying the discussion of new ones. Last but not least, the Fed is widely expected to taper asset purchases in the near term. US Treasuries are gaining momentum amid these factors, which is bearish for the stock market, so the S&P index is likely to trade in the range between 4,350 and 4,200. NASDAQ also decreased last week. It slipped to 14,500 from 15,050 due to negative news. Congress narrowly passed the government funding bill as lawmakers rushed to adopt the measure before the shutdown deadline. As a result, Congress managed to extend funding for the federal government only until early December. Shortly after, the equity market made an attempt to advance. However, yesterday there was the largest outage of social networks worldwide. The social networking giants faced an unprecedented outage that lasted roughly 6 hours. Tech stocks as well as the whole stock market collapsed. Currently, the stock market has entered the correctional phase. The overall decline in the stock market also affected several stock exchanges. For example, on the New York and NASDAQ stock exchanges, the total number of shares that incurred losses exceeded the number of shares that rose in price by almost 2 times. In general, a negative trend is seen in the technology, consumer services, and healthcare. American Airlines Group shares fell by 1.2%. The company has joined several other carriers in requiring its employees to get vaccinated against COVID-19. Facebook shares declined significantly. A former employee of the company, Frances Haugen, an interview with a 60 Minutes program on CBS, admitted that she revealed tens of thousands of pages of internal research and documents to a journalist from Wall Street Journal with possible compromising material. Tesla reported an increase in production volumes that led to a slight rise in its shares. To sum up, the US stock indices declined at the end of the week, including the shares of large tech companies. The stock market weakened due to concerns about the future policy of the largest central banks and the state of the global economy as a whole. Besides, uncertainty over the fate of China's real estate developer Evergrande also weighs on the market. Traders fear that the company's bankruptcy may adversely affect the Chinese economy. So the sentiment in stock markets will largely depend on how the situation is resolved. And that's all for now. Thank you for watching. See you back soon.